Yo, what's up, everybody? It is Tuesday, June 4th. Markets closed up today. Actually, they were down early. Overnight they were down and they recovered. I'm a little bit surprised by the recovery, even though I did say that we would see a rebound through early this week. But I'm still going on the view that we are in a slowdown in economic growth, and stocks will reflect that. So I basically advise selling into these rallies or standing aside. I don't think they're going to be sustainable. Yesterday was like a 2 billion net positive flow. And that was even with a Social Security payment. There was a Social Security payment yesterday. So most of the major flows came last Friday. I spoke about that yesterday. We had it was 121 billion day of leading flows, and we had 106 billion of net flows. Yesterday we had 2 billion in net positive flows. There's still 36 billion left from that April tax drain that hasn't been recovered yet to get us back to the non-government's financial balance right before April 15th. Incredible. I mean, this has really, really dragged on for a long period of time. And we got another tax drain coming on. Actually, the date is June 17th. I've been saying June 15th. But June 15th is a Saturday, so that tax drain is going to be on June 17th. And last year, it was about 90 billion. And it took until the end of June 30th, to recover that. But we've been seeing these tax drains this year, they're larger. Okay, this April one, I mean, we're basically still dealing with it. So I checked the net government transfers through yesterday, okay, aka the deficit. And right now we're down 199 billion, let's call it 200 billion year over year. So the deficit has shrunk 200 billion. That's not massive, but it's going in the wrong direction. That's a shrinkage. So in other words, the water level in the pool has come down. Less transfers to the non-government, to the economy. Okay? This is what I've been talking about. This is what I've been telling you guys about. Again, that's not a huge number. You know, we're still probably going to be talking about a 1.5 trillion deficit. Maybe slightly less when this all is said and done at the end of this fiscal year. Last year was like a 1.7 trillion deficit. So, I mean, that's still big by any historical measure. And that's what's keeping the economy in a positive growth mode. Although you can see now that 200 billion shrinkage, you know, it took us down appreciably from the fourth quarter of 2023, right? The economy was growing at 3.2%. Now it's under 2%. Like I said was going to happen. I said it was going to be less than 1.6%. We're probably right in that range, 1.5, 1.6%. So I don't think it's going to go much lower than that, the growth contraction. I mean, the deficit, I don't like to use that word, net government transfers year over year, they might continue to drop, okay? But it's not going to be like, okay, we're down 200 billion now, we're going to be down 500 billion. No, it's not going to be like that. It's like a slow, steady drip. So I don't see us going into negative GDP growth. And there's still a chance that we can have an acceleration in the top line, the leading spending flows. I've been talking about that, saying that there is a possibility. I mean, the data from yesterday put us up 84 billion over last year in terms of leading spending flows. That's like the highest it's been since March. So we just popped back. I mean, I looked at it graphically, and it just popped back over all the recent little highs that we made since March. And it's back up to the highest level since March 23rd. And I don't like to extrapolate and declare a new trend from one day of data. You know, I like to see how it evolves. It's not necessary to act in haste, okay? I've spoken about this many times. There's always going to be opportunities, okay? I've gone over this thing. This is a talk I've given to you guys so many times, and it comes from personal experience from yours truly, from me. There's always going to be opportunities, and it doesn't pay to act in haste. I do that a lot sometimes, even now, like not so much in terms of my activity in the market, but when I look at this data and analyze it, sometimes I declare a trend when there is none, really. It looks like that because I looked at it for 1 or 2 days. You got to give it some time. You got to give it some time. And I know a lot of you don't like that, and you think that it's me flip-flopping, or you want stuff like now, I got to do something tomorrow, I got to do something, not just something tomorrow, I got to do something every hour tomorrow, every 5 minutes tomorrow, and the next day, and the next day, I got to be in, I got to be out, I got to be in, I got to be out. I don't do that, okay? I had all that. I'm probably older than a lot of you guys. I've been in this business a long time. I don't do that, okay? Take it down. I take it down many notches. I step back. Try to get some perspective. Stay calm. Try to stay calm all the time. All the time. Just chill. Stay calm. Relax. All right, that's another thing I learned from boxing. When I spar with good guys, a lot of times they tell me relax. Like if you're tense like that, and how can you not? Because you're gonna, I'm gonna get punched in the head. I'm gonna get punched in my gut, whatever. You tense up. Or even when you throw a punch, you think like, oh yeah, you gotta be, strong and get those muscles all tightened up. No, that's no good. You gotta be loose like spaghetti. You gotta be, isn't it interesting how these concepts, they're like universal through everything, basically like in the universe, like this kind of flow, this calmness, loose, Once you tense up, then you're not as efficient. And in terms of thoughts, like you're blocking out a lot of things that you might otherwise see if you were calm. All right? Fighting is a great example of this. Like if you're calm, even if your opponent is bigger than you, if you're calm, you could see things coming a lot better than when you tensed up. And your offense is going to be a lot better too. Same thing in this whole trading, investing business. There's no rush. There's no rush. The biggest money I always made would be like on a single trade that I just sat with it. And the ones like in and out, that was like, I talked about this, that was like, trying to make the market pay me a wage, a salary. And it wasn't always very generous, okay? But that was me doing it to myself. But I know a lot of you like that, and you want that, and you think you want that for money, but in reality, you want that for the action. That's kind of like a gambling mentality. That's like going to Vegas. You like the craps table. Come on, 7. You like the action. It's like an addiction. It's a form of addiction. It releases the dopamine in you, the endorphins. It gives you kind of a high. It's an adrenaline rush. You like that. I stay away from that stuff. And so, in the same thing with the analysis, everything I do is based on numbers. Okay? I had a guy here the other day who said, everything he talks about is just, it's like opinion. No, it's everything I do is based on numbers. Yes, it's my, deciphering of those numbers and then transmitting it to you. Okay? But it's all based on hard data. And so sometimes you need more data. What can I tell you? Sometimes 1 or 2 days of data is not enough. You need more. Sometimes maybe even a week is not enough. Something maybe look like it's developing and it's not developing. That doesn't mean that I'm basing everything like on an opinion or a guess. I'm basing things on data. It's like anything in science. Okay? Through the process of experimentation, you learn a little bit more each time. Then you piece it together like a puzzle. Same thing here. Same thing here. So, and again, I do these videos every day, or I try to do these videos every day. There's not something to talk about every single day. I do this as a courtesy. There's little tidbits of information, like I told you yesterday's net flow was $2 billion. Is that really that important? We still haven't recovered from the April tax drain. I've been telling you that. If we had recovered, I would tell you that too. Okay? Economic growth has slowed down, just like I forecast. We had 5 downward revisions, and we may be stabilizing here. We got a 199 billion less, 200 billion less, let's call it, in net government transfer. This is something that I'm still following, okay? It's getting wider. That year-over-year negative gap is growing, but it's not growing as fast as it was. But it's still growing. So, I think that from 3.2% in the fourth quarter of 2023 down to, let's call it 1.6, 1.5% now, I think that drop in growth pretty much reflects the shrinking in net government transfers. We would have to go down like by another 200 billion to go zero growth, and I don't think that's going to happen. So as long as there is growth, that's bullish for stocks. It's just that the rate of growth will determine the rate of ascent or rise or appreciation in the market. We're going to squiggle around for a while, okay? Now, if the Fed comes in and says it's going to cut rates, you know what's going to happen, and it's going to trigger all the monetarist zombies to go crazy and buy. The other thing is sentiment. We've had in 29 of the last 30 weeks, that AAII bull bear spread that I watched, that's the American Association of Individual Investors, their weekly survey, the bullish bearish spread, you take the bulls minus the bear, that's been positive for 29 of the last 30 weeks. That's getting stretched. That's not necessarily a perfect timing indicator, but that's getting stretched. The other thing I spoke about the other day was you got the highest net long position in S&P E-mini futures being held now by institutional asset managers. Some guy criticized me here too in a comment saying, "Oh, Mike, that's the tail wagging the dog." No, because the first thing I always talk about is economic growth. That's the dog, okay? If I threw in some additional, color commentary or information based on the positions, I'm not claiming that the positions of institutional asset managers in the futures markets would be the reason for a market downturn. I say the reason for a downturn or a correction is the slowdown in economic growth. I just threw that other tidbit of information in there. I think some of you have a comprehension problem. I'm very clear on this stuff. Very clear on this stuff. So anyway, that's it. So that's it for today, folks. Please like and subscribe. I see many of you are doing that. I appreciate it. I want to thank you very much. It helps the channel very much. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.